My name is John Ross, and I'm the Marketing Coordinator of Business Development at AGC of America in Arlington, Virginia. Before we begin our presentation, I do have a few brief announcements. If you have any questions for today's presenters, on your screen on the GoToWebinar toolbar, you should see the questions box. Please use this area to submit questions as they occur to you, but do be aware we will hold off on answering those questions until either one of the opportunities during the webinar or until the end. Where we'll have a formal Q&A session. Except for today's speakers, attendees will be muted for the duration of the webinar. Also, everyone who is registered for today's webinar will receive an email within the next 3 to 5 business days with a recording of the audio presentation as well as the PowerPoint in PDF format. I'd like to introduce today's presenters: Debbie Altham, Senior Director of Industry at Sikich, and Tim Tucker, Partner of Technology at Sikich. And Debbie, Tim, I'll turn it over to you all.
Excuse me. Hi, everybody. Nice to present today. A little bit of background on who we are as was introduced. I'm Tim Tucker. I'm a partner in the technology practice at Sikich. We'll talk a little bit about who Sikich is in a second. Debbie, you want to say hi and introduce yourself?
Yep. Hi, everybody. Debbie Altham. Have been working with Sikich about 6 years and have a fair amount of background in the topic we're talking about today, including a stint as a project controller at a construction company. So,
yeah, maybe a little bit about my background as well. I have in my history about 20 years of experience in various large construction industries, but always from a technology perspective, business systems, ERP, and things like that. So I've seen quite a number of different ways to leverage technology, and now I bring those to the table in a consulting capacity for our clients that need to figure out ways to leverage technology well in their businesses. So maybe move on here. So a little bit about Sikich and some of our industry specialization and our commitment to those industries. So certainly in technology, our technology practices do a lot of kind of the buzzword of the digital transformation. Remote work enablement has been real huge over the last couple of years, especially in light of COVID, but it really started before that. Information security compliance, a heavy emphasis on ERP. So the whole, back office, accounting, production systems, related to that. CRM systems, managed IT services, security, cloud technologies. We have a large side of our company that does accounting, tax, and audit services for various industries all over the country, and also an arm that does advisory services, things like human resources, business process improvements, litigation, wealth management, valuations for companies that might be looking to sell, things like that. Debbie, did you want to add anything that I might have left out there?
Oh, I think you've got it all, Tim.
Okay. So specifically related to things that you could say are kind of in the realm of construction, Sikich has a little over 560 clients across those different practices that I just talked about in the construction industry. So everywhere from general contractors to real estate developers, heavy civil construction, small construction companies where we might just do the books for them, all across the board. So we have quite an area of expertise in these industries in our firm. So maybe diving into the subject matter a little bit now that we've got the background out of the way. Sikich did a study with a company called Construction Dive, where we tried to develop some understanding of trends of what's going on in the industries, specifically as it relates to on-site, in the field type of construction versus you can call it, use of the term prefab, you can call it off-site construction, you can call it lots of different things, but basically stuff that's being done in a factory or somewhere else and then brought to the job site. And in part of what we did is we sent a lot of surveys out to hundreds of different companies, and there were some clear trends. One of them this slide speaks to, which is that 46% of a construction executives say they're actually performing offsite construction today. It could be modular, engineer to order, and we're going to talk about some of these terminologies here in a little bit, which is actually a lot higher than we thought it was going to be when we commissioned this study. This was also rather interesting. 55% of the respondents said they plan to invest in an engineer to order type of capability. Same study. So, you know, what is engineer to order? It's typically a manufacturing term. It's something you have heard a lot in manufacturing: configure to order, manufacturing to order. I'm sorry, excuse me, engineering to order. And it's a little bit different than your typical construction. The disciplines and the needs for related technologies to support the business effectively as well. So that gave us a little bit of insight. So some of the benefits of the offsite model working, you know, in a factory environment versus, you know, on the job site. These also came out of this survey. Drivers that the companies were looking to improve either in their own businesses or the benefits that they saw and why they wanted to move to this model or were already moving to this model. Some obvious areas around safety, you know, doing things faster, more repetitive. Quality control was a big one because we could have more control over the process, driving quality higher. Utilization was one that was interesting. You know, improved project scheduling, labor utilization, control over labor resources, access to them. Certainly costs and waste was an interesting one too. You know, less waste. Part of the less waste is also the less of materials disappearing from the job site as well. Debbie, anything that you want to jump in here that we saw?
No, I think that a lot of organizations are trying to address the supply chain challenges as well, and by having that that all of the materials in the one place. Tim, you mentioned the material waste, but also being able to look at the materials in aggregate was really important.
Yeah, but the systems required to do that are very specific too, which we'll get into a little bit here. So some of the things that we learned in our study, some of the things that you know, the traditional working you know, offsite, we're trying to improve that. You know, they were telling us that their ERP provided full visibility into. They typically had that problem solved, or they maybe had that problem solved on the job site, but there were some holes in what they had in using those same technologies in an ETO or a manufacturing type of scenario, which is what happens when you move it into, you know, a factory or a controlled setting like that. If they had a manufacturing type of ERP already, then they did have that visibility, but there were some very common themes that were missing. And the clear trend, the clear analysis of the study that we did was that, and what we heard from the people that responded was, for those that were using their traditional tools, their traditional business systems, the traditional ERPs that were built for construction, did not have the capabilities they need for things like inventory management, for the manufacturing production process that you typically have in a manufacturing-based ERP. And so, you know, the bottom line that we've been seeing is that really, and we've been hearing from our clients as well that are going down this journey with us, is that if they try to adapt and use their same ERP for construction, it really is the wrong tool for the job.
I think, Tim, I would add that the experience I've seen too is that any old manufacturing system won't necessarily do. So it's not just let's go out and Google manufacturing systems and find someone who has software that supports the production of widgets, because just as this is not necessarily suited well for construction, it's, you know, you need software that gives you a little bit more than your widget manufacturer might ask for in their manufacturing system.
Yeah, I think it's important point of the discussion. ERP solutions, business system solutions that are built for manufacturing typically don't do construction well, and ERP solutions that are built for construction typically don't do manufacturing well. So as the industry, as we see trends in the industry where more and more work is being done or looking for solutions to do the work in a manufacturing scenario with delivery to the job site for final installation or build out or whatever. You know, how do you have the systems that support kind of both scenarios? And that's the real quandary that a lot of companies find themselves in today. So to try to sort this problem out, we built this comparison to try to first make sure there's a fundamental of understanding of what are the differences between the two businesses. And then once we understand what the differences or similarities, commonalities are between the two businesses, then you know, that as a requirements framework for ERP system can be understood a little bit better. So Debbie and I are going to kind of walk through you know, what we know, because we do have both manufacturing clients and we work in manufacturing industries, and we also work in construction industries as well. So what do we see are those commonalities but differences. So Debbie, why don't you start this off here, and then I'll pick it up as we go through.
Sure, and really what we're seeing here up front is really one of the fundamental differences, and that is with a project-based manufacturing or engineer to order, the system assumes that you're making something that's going to be a finished product, and that finished product is going to be made up of these components or a bill of materials, which is the list of materials that have gone in. And I contrast that to construction, where generally it's a project and the project consumes the materials as they're purchased and they disappear into the cost of the project. So the real difference here is that in engineer to order project manufacturing, you have visibility of those components that are individually adding cost to the thing that you are making on the shop floor or in the factory setting. Generally, what that means is that once you've got an identification, and this is inventory, right? It's the identification of something that's inventory. And that inventory might be bought specially for the project. And an inventory item doesn't have to be something you stock, but it's certainly something you account for separately. And the reason you want to do that is, again, mentioning the supply chain challenges previously, is that by recognizing it as an item or a stock item that can be acquired, you can then use the functionality that these manufacturing systems offer around MRP. So material requirements planning, this is what I want to build, this is what it's made up of, go tell me what I need to buy, when do I need to buy it to be able to make the thing that I'm going to be needing to install.
Accounting for lead times of the various materials,
right.
You know, how much you need to have on hand in your warehouse potentially because of the demand that you have, you know, the product that you're building, et cetera. And that's a real big difference from what you typically see in construction. Typically, not always, but typically, the purchasing of the material and the planning for those materials is done as a function of when do I need it on the job site, and it's bought for the job and it's not bought for inventory. And concepts like material resource planning just isn't a thing in construction typically. Like I said, there are some exceptions, but typically. This concept around production orders is just a fundamental difference in the way manufacturing ERP systems work versus construction systems work. The concept of a production order is how the product is manufactured, how you consume all the materials, you know, how the thing that you're building, the widget, whatever it is, moves from one machine center or work center to the next one, and you know how the time is accounted for along the way. This is just not a concept that is anywhere in a construction ERP. You just don't use production order, this production order type of capability or functionality. It's all job based. It's all job functions, work breakdown structure, who is doing what, and you know what materials are purchased for, as we just said.
The nice thing about the use of production orders also is the fact that it takes into account the timing, the time phasing, the time at which it moves through the factory floor. So you can have those all accumulate to work out when it, you know, the latest possible time that particular thing you're making can be finished. So rather than use sort of like, as Tim said, a work breakdown structure and project planning, you're actually using the mechanisms within the production or factory floor to be able to add the time together to accumulate, to work out, you know, what it looks like in terms of time. And then also how as it goes through that process, you can attribute material costs, you can attribute overhead costs, etc., as it runs through and of course labor costs as well. I think the next one is really recognizing that with manufacturing, an engineer to order type system can help you do things like sub-assemblies, which means that I am building thing A, but that thing A is made up of building 3 separate things and compiling them together to be able to recognize that they build up to something bigger and then ship as something bigger. So again, because we have the ability to have a bill of materials, we have the ability to have assemblies and sub-assemblies and a production order associated, you've got that relationship that all builds up together to get the total cost of whatever you're making, as well as all of that time and inventory management stuff that sits behind it.
Yeah, and I think a couple of concepts on this line here around inventory, the sharing of materials across projects is key too, because in a manufacturing environment, because you are tending to build the same things, or even if it's an engineer to order where you're building unique things, there's probably something you specialize in, and you can buy inventory and have it on hand and use it, between different projects. Whereas typically in a construction environment, you're buying the materials for that job, they're delivered to that job, they're consumed on that job. Hopefully you only bought enough. Usually there's a little bit of scrap or waste or loss or whatever, but then once it's done, it goes off to the dumpster or whatever, who knows what happens to it. You don't typically share materials across the job. An example, in a real life example where we see this become a reality in an industry that's moving from everything being built on site to into a factory, is one of our clients builds bathrooms for hotels and hospitals and things like that in a factory, and after they're done with the bathroom, they boat wrap the whole thing and put it on a trailer and ship it to the job site where the hotel is being built and install it. So the materials that they purchase in that example, even though the configuration of the bathroom may be different from job to job, it's all the same stuff, or it's enough of this, I shouldn't say it's all the same stuff, it's enough of the same stuff that the common materials like the PEX or whatever they're using for siding, drywall or whatever, can be bought and leverage these MRP and these planning concepts across many different jobs. And there's a lot of things that you can benefit from that. Everything from how much you're leveraging and buying supply chain issues, driving your prices down because you have a better understanding of your spend with particular vendors and things like that. At the end, when the product is done, in a manufacturing environment, it's usually shipped somewhere, right? It needs to go to the customer. It's kind of obvious. Obviously, when you're doing it on a job site, it's not shipping anywhere because it's being built out on the job site. The billing is done a little bit differently in the 2 different scenarios. So it tends to coincide with shipping. Usually on a manufacturing, there's an upfront sort of draw related to materials, so you can manage your cash flow, and there's some type of pay point structure, but it often is just done as a final good depending on the cost of the component as well. In construction, the billing is done considerably different. You might have a down payment, whatever the particular law codes allow in an individual state. Then you typically have something like a progress billing, milestone billing. It could be percentage of completion, it could be fixed fee, it could be cost plus. There's, I just named half a dozen different ways that billing could occur, in the construction world that you don't see in manufacturing. This repetitiveness is kind of obvious. That's kind of part of the whole reason for doing things in a factory, in a prefab type of scenario versus on a job site. In a construction, there is just a lot less repetitiveness across projects, materials. The labor may be similar, but that may be about it. Subcontracting is an interesting one. So in construction, we all know there's a lot of subcontracting in individual trades, especially trades. The subcontracting in a manufacturing is a little bit different. It tends to be more specialized. It's usually for a specific sub-assembly or a particular process that needs to be outsourced. I need to go send something out for powder coating, for example. That could be something, it goes out, subassembly happens or that specific thing happens, like I said, powder coating, then it comes back in, but it's usually very specific. It's not as broad and common as you have in the construction world. Costing is considerably different. Debbie, why don't you talk about this one for a second?
Yeah, so there's principles around costing that are entirely different. And for example, inventory costing, where you can have inventory sitting in your warehouse and the cost of that inventory doesn't attribute to the cost of your project until you draw down that inventory and actually put it into, on the shop floor into the product that you're making. So you may have a huge raft of inventory bringing in stock to build up to be able to then start a production process. And of course, we've got inventory principles like FIFO, weighted average, for example, and standard cost that are very much specific to how inventory manufacturing and any inventory-based business will work. There's accounting rules around inventory and how you value it, which again is entirely different to job costing. With a job costing, you will get the actual cost of that material, attribute it straight to the project. So in times of increased changing inventory costs, let's say products that you're shipping in from overseas, given the shipping prices have all gone up, how are those shipping prices attributing to your various jobs? How do you want them to roll across all of the jobs evenly? Do you want them to go on a FIFO basis or a weighted average basis or a standard cost basis? These are not the things that you need to think about generally when you're doing job costing, because obviously you're buying to the job. And so for every cost that relates to getting that inventory in is attributed to the job. So that's quite different. Production costing is the accumulation of all of the inventory costs. Added to that, the accumulation of the individual labor costs working on that particular item, building it out. As well as some attributes of project costing. Let's say that there are things that you buy specifically for that particular job and you want that cost to go straight to the project. That's also something that you should be able to do in a decent project manufacturing system. Again, these are things that are contributing to the total cost of the particular thing that you're building that make it entirely different than the way that job costing would traditionally work.
Yeah, and the fundamental underlying concept of just, inventory is an asset in one scenario and it's not in the other scenario
Right.
leads to all those things that Debbie was talking about. And that has a very, very deep impact on your financials. And that kind of dovetails right into the next category, which is labor. Labor is quite a bit different in the way that is applied as well. On the construction side, it could be very simple. You could just have a simple, labor rate, cost plus an overhead markup or whatever for various skill classes and things like that. You tend to focus on the actual standard labor cost, and when you have jurisdictions where you have things like what you may deal with union labor, prevailing wage issues you might have to deal with, commonly have to deal with in construction scenarios that you probably don't have to deal with in the manufacturing. But there's some other differences just in the fundamental way that you account for costs in manufacturing. Debbie, maybe pick that point up.
Yeah, certainly. In my experience, I've worked with a lot of manufacturers, and manufacturing typically, and I would say probably 99.99% of the time, manufacturers just take standard labor rates. No one is actually, they have a balancing activity that the finance people do to work out whether they're under or over recovering their labor, but very much actual labor costs are not attributed traditionally to the production of a particular item. It's all using standard labor rates.
Yep. And then of course the whole factory overhead concept as well, Debbie. That's just something that you don't have in a construction scenario, right?
Look, it's from a cost accounting perspective. It's like I mean, it is entirely two different business models.
I mean, there are some similarities in the way time is tracked. In a manufacturing environment, you're going to have some shop floor control systems, check in and out of jobs that also It can account for time on machines and things like that. It's typically disconnected from payroll time and attendance. It's more of a a costing mechanism. In a lot of construction projects, if you're accounting for time on the job, people are clocking in or out. There may be, probably should be, some type of integration to payroll, so you're not asking the people, the laborers, to do that type of thing twice. Of course, back to the concept of inventory, you're going to want things like handheld devices in a manufacturing environment to manage the inventory, whether it's receiving inventory, putting it away, picking it, where is it in the warehouse. That also contributes to the consuming of the inventory on the thing that you're building. This is just not something that happens in the construction world from an inventory perspective. There's no need for scanning devices. Now, there may be need for handheld devices for things like time entry and some job task tracking, but specifically for the use of the specific case around scanning an inventory, that's very unique to manufacturing. Maybe take this one, this line.
Yeah.
Here,
so
Debbie.
one of the things that is very, very common, obviously, once you've got a factory facility, you've got the cost of that facility, but you've also very commonly got the cost of the machinery that you're using to do the manufacturing. So, and a lot of this machinery is not only very, very valuable, but also has maintenance costs associated with it, and also the scheduling of those machines. So one thing that a project manufacturing or engineer to order manufacturing system should be doing for you is allowing you to understand the scheduling of those machines, make the most of those. If you've got multiple jobs running through on the factory floor, understanding how you prioritize the use of those machines, and then attribute the cost of those machines to the thing that they're working on. So, a very expensive machine that's cost you a lot of money can apply the cost to whatever jobs you're using it for, and then the rest of the jobs don't necessarily get that application of cost. And of course, the break fix and the maintenance scheduling. You want to schedule that machine down for a certain amount of time. You want to adjust your jobs to make sure you can deliver on time without impacting it, and being able to bring in your maintenance scheduling. So these things like capacity planning, maintenance planning, being able to run that factory floor like a well-oiled machine, where you basically on your system are able to see what happens if a particular machine breaks down, what jobs is that going to impact. Those are the kind of things typically you wouldn't have in a construction system, because it wouldn't necessarily recognize that you're using machines as part of your workflow, if you like.
Well, and then like you said, how that feeds back into the capacity planning. If I've got 3 machines or 4 machines that do the same thing, and I need to take one offline for scheduled maintenance, how does the availability or lack thereof of that machine feed back into the capacity, feed back into production scheduling? And the ERP accounts for all of that. On the typical construction ERP, you may have equipment set up as a resource and just allocate it to the job site and see kind of basic availability. And you may track it as an asset, but a lot of construction companies just don't have equipment. You typically see it in the heavy construction, things like earth moving equipment, or maybe a roofing company has sky jacks, but vast majority of construction companies just rent their equipment when they need it, so they don't carry that asset on their books, and they don't have to worry about scheduled maintenance and things like that either. It's just a fundamental difference, and there certainly is no concepts around capacity planning and production planning as a result of equipment availability in the construction world. So, and we've talked a little bit or a lot about some of the fundamental differences in process in these two environments, but what does that mean from an ERP perspective? So I hope some of the things that we've talked about, it starts to paint a picture that there's just fundamental requirements that are different. There's certainly some overlap, but there are differences. When back to our construction dive industry survey that we did last year, 25% of the executives that are moving to these manufacturing type of capabilities, engineer to order is a term we use a lot in this type of situation. It's 25% say that inventory management was the biggest missing piece in their current ERP system. And the reason for that is because typically using or trying to continue to use construction types of ERPs that are missing a lot of the things that we just talked about. And that kind of core inventory management is such a cornerstone to a manufacturing environment that without that, it just, the problems bubble up to everything else. So that results in a lack of automation, a lack of material resource planning, the costing related to that, and then the real-time shop floor data collection is impacted by that as well.
I think, Tim, what I might add is one thing we have seen is organisations who will carry on with their construction system and then stand up a completely separate, entirely different system to run their inventory. And what you're doing there is you're actually not getting the benefit of the fact that if they were in the same system, you would get that full visibility of material handling, both from a job perspective and of course from a shop floor perspective.
Yep, that's absolutely true. So we want to talk a little bit about the workflow, and we're going to run through this pretty quickly, but there are a couple points of just the overall process in an ETO manufacturing type of business versus a construction business. There are a lot of similarities, so we'll try not to spend too much time on all the similarities. Go through this quickly. Some of this is pretty obvious. You identify your opportunity, your lead, you get it quoted. Hopefully you win the business. If it's good business to win, you get the project scheduled, and you go to production. Like I said, I'm not going to go through all the bullet points, but here are some of the things that are different, and you've probably gleaned some of this from the conversation that we've already had. The procurement of materials and planning, the concept around MRP when you sign the deal, that's something that is completely unique to manufacturing and engineered order. On the production side of it, project inventory related to receiving, I may need to order, what do I have on hand versus what do I need to order because I don't have it on hand or it's unique to this job. Engineer order type of scenario, it's, there's going to be a lot of inventory that's similar, but then there's going to be things that are just unique to that particular job that needs to be procured. If it's already in inventory, getting the pick lists organized so that it's being brought to the shop floor and the order and the timing when it's needed, and then accounting for the inventory that is unused, whether it's either unused or maybe it's scrap that can be reused another way. How does that get returned back into inventory? And then the purchase order process is shop floor control. Maybe Debbie, you can touch on those two bullet points there for a second.
Sure. So what that's really doing is it's showing the process again in that shop floor within the factory and within the confines of the factory. And purchase orders for expenses, let's say that you have got a purchase order out there for someone who is going to subcontractors, and subcontracting is a good example really, where you've issued a purchase order for a subcontractor to do a particular thing, as Tim said, maybe powder coating. And as those those materials are issued to the subcontractor, the powder coating is done, you're receiving that in, and the expenses are attributing pretty much real time. So you're getting that step by step visibility of what's occurring from not only an operational perspective, but also a costing perspective. And then that shop floor control with the labor is being reported. Of course, as whatever it is, the thing that you're building is moving through that shop floor, actually being able to see that labor reporting as it goes through. So you may be hitting milestones, you might be, completing a particular major task, creating what we would call a sub-assembly, staging it, getting ready for a final assembly, staging it, getting ready for final testing, and actually having that visibility of all that labor all the way along that process chain.
Yeah, the one thing I'll add to that we didn't highlight on this slide, the engineering change management. Now, change orders in a construction world is part of the normal process. Engineering change management is a little bit different concept in an engineer to order workflow. So as whatever it is changed, it could be as simple as this bolt is no longer available from this supplier, so I need to go find a similar bolt of the same grade, the same tolerances from somewhere else, and so that's an example of a really simple engineering change. Or it may just be something fundamentally different. Hey, there was a code change that we were unaware of, or this earthquake code in California, they didn't sign off, the city didn't sign off on it, so now we've got to do an engineering change into the whatever, something structural in the bathroom we built. I've kind of made up that scenario, but you get the point. So then those drawings are then changed, and then as the drawings are changed, typically those are fed into the ERP. There's usually an integration between your CAD/CAM system into the ERP to understand what the bill of materials is. So now the bill of materials has changed, so that affects all of your inventory. Well, not all. It affects your inventory, it affects the production order, capacity planning, and it has to make its way to the shop floor so that that change can then be introduced in the system. And then what are the resulting costs as a result of that change, and does that impact our selling price or our contract price, whatever it is? So that's yes, it's kind of like change orders, but because it's, again, in this controlled environment that has all these other factors that we've been talking about, it's something that has to be managed very carefully and very well, and it needs to be functionality that's in the ERP. Otherwise, you're going to have a cost control issue.
I think the other thing to add there, Tim, is also the understanding that there's a concept of a planning BOM, a bill of materials, which is the list of materials for planning. And then there is a bill of material that's been released to the shop floor. But as Tim says, with change management across the production process, you get at the end an as-built bill of material, which could differ quite a lot from what you planned and what you actually issued to the shop floor. The nice thing is with that as-built bill of materials, it gives not only better control from an inventory perspective, particularly if you're building things with components of high value, but it also gives you traceability. So if you want to do really good traceability, let's say you've got serialized items, maybe the thing that you're assembling has got a motor in it that has a serial that you'll need to track warranties on, for example.
Or you may have a regulatory issue that requires you to have that kind of traceability.
Right. So being able to do that and produce what is a as-built bill of material, which is, this is the thing that was finally going to be shipped. It includes the serials, any batch tracing, any other thing that you require to have sort of be able to deconstruct, is pretty powerful in terms of the amount of information that you're gathering.
Moving on to kind of round out the discussion around the workflow. One of the things that happens in an engineer to order, any type of manufacturing scenario, is that when the product is finished, it becomes inventory until it's shipped or paid for, whatever. And there's a very real financial impact because of that, right? Certainly this whole concept around product delivery, because you need to ship it, and it's removed from inventory, you need to track the delivery. There's a whole set of functionalities around shipping and the tracing of that shipping that needs to occur and needs to interact with your ERP that you don't have in a construction environment. It's a very real part of the process that needs to be managed, and you need to have visibility into.
I think the other, a good engineer to order system will also reflect the fact that sometimes you need to ship multiple things to site. You might need to ship some, some go in containers, some might go on trucks. They need documentation, they need bills of lading. So the idea behind this additional sort of production system is that it should be able to give you, these three things went in a container, this went on a truck, here are the bills of lading that have gone with it. And again, that traceability, as far as it recognizes the time, the time it's going to take to ship. Maybe the shipping takes a certain amount of time, and then maybe before it's installed, you've got checks and things that need to be signed off as well. So an engineer to ordering, this is where this is fundamentally different from a manufacturing system that just doesn't do engineer to order, where it cannot recognize, once it's delivered, it's gone. A good engineering to order system will allow you to recognize the multiple shipments and also the sign-offs that have to happen before you can consider the ownership change potentially, or can consider that inventory item accepted by the customer.
Yeah, and that parlays into this next slide that I brought up here. We've already talked about all the functionalities around replenishment strategies and MRP and traceability, things that you need. The data and analytics and reporting that goes along with that is just as important as the functionality. Same thing with all the movement of the materials, whether it's I can't talk, advanced shipping notices, the ASNs, the receiving of the materials, quality inspections, inventory counts, knowing when to trigger a recount. What does that process look like? And then, of course, the physical management. How do I lay out my warehouse is just a fundamental thing that needs to be considered. And then, what does your ERP know about the layout of that warehouse? Because that is fundamental to the picking process and the put away process as well. And all of this bubbles up into, of course, the financial management concepts. So you know how well you're running your business, your inventory valuation, costing, write-offs, things like obsolescence of either materials, parts, machines, and of course shrinkage is a thing that needs to be managed as well. Any other thoughts or comments around this, Debbie?
No, I just drill down on some of that data. I know one of the biggest challenges is to understand that we have a master data management requirement now with inventory. I know certainly in construction you'll have, someone's purchasing something for job here and someone's purchasing the same thing for job there, but if you read the description you would not know the two things were the same. So this really brings in some discipline where you really have to do something like a master data management strategy. You need to know that if you buy the same thing, you use the same codes. If you don't, then you won't be able to use it for planning. So a really fundamental change is that understanding of the concept of master data management. And I think that's a very starting point. If you can start to think about how you identify inventory items, how people can search your catalogs to make sure that the catalog of things that they can buy is something that is recognized by the system. It does require a lot more discipline than I think is typically used when you're just writing costs off to a job.
So, we talked about some of the similarities and differences between the business, the processes, the requirements around the ERP. Talk a little bit about how we at Sikich approach these needs. So, one of the first things, if you use this kind of Venn diagram as the example, while there are differences, there's a lot of things that overlap, right? We've talked about this extensively. Part of our job and what we often get hired to help a company figure out is, what am I? From just a fundamental business model. Am I still a construction company? Am I a manufacturing company? Am I an engineer to order manufacturing company? Am I an engineer to order manufacturing company that's speaking in construction lingo still? And so, part of the first part of the engagement is to try to sort this out and make a recommendation, in one path or the other, based off of what the business model is. In some cases, may already know, and it may be an easy discussion, right? But certainly understanding this overlap is important, because you've got around this ring of these two circles, you've got a lot of things that are, like I said, are the same requirements, but there's quite a bit of overlap as well. In the middle, we have a term that we've coined called HEADSTART, and that's our program, our approach. Whoops, went the wrong direction. That's our approach for doing an implementation for a new ERP. And either one of these three business models that we're talking about, whether it's manufacturing, engineer to order, or construction, that is a high value, high speed to value type of approach. So we have some pre-built solutions, both with some of our own IP built upon Microsoft stack, Microsoft ERP solutions that we can bring to the table quicker than kind of a generic implementation where you're going through and doing a full-blown requirements analysis. So the idea being that since we have some pre-configurations, we have some pre-packaged solutions, we understand fundamentally these industries, and we can make a recommendation with the software suite and some of the pre-configurations, pre-documented designs, and align those with whatever is unique about your particular business, and increase the time to value on an ERP project, because ERP projects are expensive. So why not start getting the bang for the buck sooner? Add anything there, Debbie?
No, I think you covered it perfectly, Tim.
Yep. So at that is the bulk of oh, I'd forgotten there's a graphic there, an animation. So that's the bulk of the presentation. We're right at our time for where we wanted to open it up for discussion and questions. So do we have any questions?
Absolutely. We have a few here for you. So the first question, Is there any particular process challenge that warrants moving off of a construction software solution to an ETO solution?
I'll start, Debbie, and then you can pick it up. So we talked about some of the fundamental things. The first thing to look for is that inventory question. Do I need to carry and start managing inventory? If you do, and the answer is probably you do, if you're moving to engineered order, you need the systems that can support the purchasing, the supply and demand, the supply chain, I should say, the planning of inventory, the consumption of inventory, et cetera. What else would you say, Debbie? Would you add to that?
I would just pile on top, Tim. It is inventory. It's about, on a job site, you go to pick up something that was supposed to be there and it's run out. Whereas in the manufacturing facility, you get the ability to be able to plan so that doesn't run out. And those are the kind of challenges. Also, the ability to understand with supply chain, problems, that things are taking a lot longer to arrive. And maybe someone hasn't realized that what was going to take a week is now taking 3 months. If you're managing it in an inventory scenario with MRP involved, then you're going to have something pop up to you when your vendor comes back and says, look, sorry, 3 months now. The system's going to set alerts to let you know. So managing that, all of that inventory visibility actually has a real practical implications. And I would say the easiest one is about to go and do something and the stuff's not arrived. That's the process that we try and address by doing an inventory management.
All right. We actually have 2 questions that are about the same, so I'm just going to read one of them. What BIM proficiencies are inherent to having the strategies that you have outlined here?
Tim, you can take that one.
So if I understand the question correctly, BIM efficiencies.
BIM proficiencies. I'm sorry, proficiencies.
BIM proficiencies. So in a construction and environment or building information management, builder information management is all about what it is you're building, the materials that are going into that. If it's a home builder, it could be related to cabinets, for example, or it could be related to flooring. Inherently what you want to do is you want to have an integrated solution between your BIM and your ERP, so that as you're designing new product, you have that constant visibility into what is the bill of materials, what is the stuff that I need to have on hand to build that. And if it's repeatable, because you're going to do it in multiple places, that gets back to the inventory concept that we've been talking about. But when they're integrated, you can take typically a CAD file of some kind, and there's solutions that bridge these these engineering, these CAD solutions with your ERP, and it'll read that and it'll let you know all the different materials you have, the quantities you need to have on hand or need to purchase for that particular product. And then based off of the demand that you have for that product, again, it feeds the whole inventory cycle. So it should be integrated, so it's not that big of a deal to construct your materials, your inventory quantities that you need for a particular job. And that's where you get your proficiencies, by not having to retype it into the computer or to the system, or do a bunch of purchase orders or whatever.
All right. Next question. What if you like your construction software but need visibility into prefab operations? What would you suggest I do?
So this is the $1 million question. There becomes a point in time when you become, I'll use the term big enough, but it's not really about how big you are, it's about the volume. There comes a point in time when you need to consider a complete ERP package, a complete ERP system that is purpose-built for this scenario. You can attempt to do, and many companies do, best of breed types of solutions. I like my job costing system, I like my accounting system, I like my inventory management system. Let's try to figure out how to put them all together, and that can work for a while. There becomes a point when that model just no longer scales. You're going to try to grow your business to a certain point, and it's like holding all the pieces together with chewing gum and shoestrings and chewing gum. It's not going to work. It's going to break. That's the point in time when you need to really consider your investment in technology and say, let's bring in a solution that is purpose-built to do this functionality well, end to end. There could still be a place for some specific best of breed solutions for specific parts of the business and integrate it. That's totally fine. But these fundamental concepts that we've been talking about today can be addressed in a purpose-built ERP. And it can be addressed well, and the payoff for that is just huge inefficiencies as far as no longer throwing manpower at the problem to keep it all together, but throwing investing in dollars in technology to solve it. Debbie, anything to add there?
No, I think it is difficult, because if you've got, as Tim said, if you've got a very, very large construction organization that has a tiny component that is manufacturing, that is very, very clearly engineered to order manufacturing, they are different business models, and the frustration is that small part of your business isn't going to run well on the construction application. It just isn't designed for that. So therefore, you're not going to help them any by giving them the systems to be able to grow their business based on, right? You're not solving a lot of those business problems that are typical of people who work out of factories. So similarly, the factory-based system is unlikely to give you everything you need on the construction side. So, I mean, it is, as Tim said, it's a matter of scalability and balance, making sure that potentially the right tool is used for the right job.
There's a fundamental question that I think a company needs to ask themselves, which is, in the scenario Debbie described, where maybe the majority is construction and a small component is engineer order manufacturing, the question that needs to be asked is, why did I start doing this particular function over here in an engineer order manufacturing capacity to begin with? If that was done strategically and thoughtfully to try to move the business more in that direction and reap the benefits over time and grow that, that into a larger part of your business, then you also need to invest in the technologies that will facilitate that strategic growth, that business model, because without it, it's not going to work. It's just going to be mismanaged. If it's kind of the, yes, I also do that, then you still kind of have the problem, but maybe it's not a strategic part of your business, and it's okay to just manage it however you need to manage it. But if it's done with the purposes of that's where you're shifting to, you need to think about it strategically. Similarly, when you look at the investment that typically manufacturing companies have made from a technology perspective, percentage of revenue spent on technology budgets, it's typically outpaced what the typical construction company has done. So you typically see in manufacturing 2 to 3% of revenue spent on technology, because it's viewed as a strategic cornerstone to making this business hum. Whereas in construction industries, the trends have typically been somewhere between 0.5% and 0.75% of revenue spent on technology. That's not going to continue to be a viable solution if you're intending to look more like a manufacturer. You need to look to what those types of industries have done and have been doing for years and why they've been successful. Doesn't mean to say you need to spend 2 to 3% of revenue, but there is an investment in the systems that go along with this to make that type of operation hum.
I think, Tim, also, if you've gone to the small engineer to order manufacturing model, prefab model, you've invested in factory out. You've invested. You've had to buy machinery. You have got people now that are potentially not hourly, more salaried people in there and supervising in terms of labor, and again all of the equipment. So that I think what Tim's saying is, you've already got a pretty big investment. That investment is going to be made to really work for you if you do that layer of technology over the top, because if you don't, you really are stuck.
Right. We actually have a question that's a follow-up to the BIM question. It's actually multiple questions, so I will try to get through this in a clean, clear way here. So advancing a data directory that promotes the inventory visibility is an essential part of strategizing success? First question. Your requirements description seems to indicate that this is an essential step. Could this be client specific?
It could be client specific. It's typically a common requirement. It's just not, how do I say this? It's not something that's difficult to solve. It's something that's fairly typical and normal to solve. And it's something that you kind of also do as part of the implementation, because it's been done so much in the manufacturing space. It's a little bit run of the mill, if I will. So yes, it tends to be client specific, but it's not the hardest problem of the suite of things that we're talking about to solve, because there are solutions that are in the marketplace that do it well and work with the ERP systems. I hope that answers the question.
That is all the questions that we have at the moment. So I just want to go ahead and say thank you, Debbie, Tim, for a great presentation, very informative. So definitely thank you both for your time. We really appreciate it.
You're welcome.
You're welcome. Thanks, everybody.
Thank you, everybody who joined. As a reminder, within the next 3 to 5 business days, you will receive a recording of the audio presentation as well as a copy of the PowerPoint in PDF. So keep your eyes out for that. And otherwise, thank you so much for your time and have a great rest of your day.